Hello guys, so this is a mic test. I hope you guys can hear me and see the screen. If you can kindly confirm the same by using the comment section. Hello guys, so this is a mic test. So at my end it looks like the audio is coming fine. You might hear an echo for a second there. Thank you Raj Shekhar for the confirmation. So also, can you tell me about the screen, if the screen is visible? Thank you Anna, thank you Pawan. Good evening Anna, by the way. Hi Pawan. Okay, so it looks like yes, visible EURUSD. Thank you, Rajshekar. Thank you for the confirmation. Okay, so in that case, we should start early off and start with the legalities first. So the way we will proceed is I'll first go over the disclaimer, then about us, and then we will start the charts discussion. So let's get started here. First of all, as you can see over here on screen, the disclaimer suggesting that all content presented here is purely for educational purposes. I will not be soliciting any buy or sell. If you do want to use the views presented here, you yourselves will be liable for your profit, loss of profit, or any other situation that might arise because of the use of the information presented here. So that's it for the legalities. You can read the rest yourselves. Okay, so with the legalities out of the way, let me give you a quick introduction. So guys, if you guys are already attending my webinars, then you might already know that my name is Nirav Yadav, right? I'm the admin and owner of 50 Eyes Market Analysis, which is a YouTube channel where this webinar is being broadcasted live. And all my other broadcasts, which are 24 of others. This is, by the way, the 25th webinar in the series of these trading opportunities webinars. You can view them by visiting my YouTube channel and clicking live. There you can see all the past webinars, right? Further on, let's move ahead and let me discuss more about my work. So this is my website here, 50 Eyes Market Analysis, 50eyes.com is the URL here. You can check all the webinars are also listed here in case you want to check, right? And my video course, my personal class training program, and I will soon be adding the single session one-to-one back again on the website. So that will again also be, I believe, a separate page. I will add a separate link for it. And other than this, I'll also like to point out that I'm also the author of Think with the Market, Secrets to Achieve 80% plus accuracy using Elliott Waves. This is a book which is available on Kindle for direct access, that is electronic access. So if you are interested in reading more about my work, you can check that, or my video course, which I just pointed out earlier. Now, before we move further with the webinar, let me just quickly point out the highlighting feature about my work, or one of the most important things. I have been compiling a track record of all my work for the past 6 years plus. So here you can see the track record for 2016, 83.34% accuracy, 2017, 87.5, and 2018 is 84.61. As we go forward, we can see 2019 is 84.88. And by the way, you can just scroll down in this spreadsheet. What you will find is the date on which the analysis was produced, the instruments like crude, gold, S&P, RTY, Nifty, India Bulls, Bank of Baroda, TVS Motors, etc. The video link, the instruments analysis, what I said about it, and what later on happened. All of this can be checked, and you can verify it yourselves by visiting the videos here, right? So on so forth. 2020, you can check all the reports and track records here. The accuracy was 88.52 and 2021 is 82.22. Why am I showing this off? Because this accuracy is higher than all industry standards. and I have personally not seen something like this. Generally, even a 60% is considered very high, and here I am maintaining it for 6+ years. So that's why I'd like to show it off to establish the fact that I am the absolute authority here in my field of expertise, which is, by the way, advanced Elliott Wave, which is, in short, the most advanced form of price action analysis then that is available out there. Okay, so with all that out of the way, let's now head over and see how we are going to go over things in this webinar. Let me just quickly go over here and yeah. So let me see, begin reading the book. Oh, Rajshekhar, thank you for that, right? And I will appreciate highly if you can later on leave a detailed review. We definitely need those on Amazon. What are thoughts on GBP/JPY US30? So I'm not covering GBP/JPY, and I will be checking out S&P's 500 later on. So you have to wait for it. So I was just mentioning that the way we will proceed with this webinar is the same way we proceed with all the other webinars. So first of all, we will go over the EURUSD chart, then EURCAD, followed by USDJPY, EURJPY, crude, gold, S&P, Nifty, and in the end, we will check out Bitcoin, right? Every time I will go over and complete a discussion, I will ask you guys if you have understood it. At that point, if you have understood the concepts or the analysis which I have discussed, you can then type in clear or understood in the comment section. If there is any doubt, you can obviously hit the comment section and ask away your doubt and I'll clarify it. But kindly do wait till the time I complete the analysis. So that's it for the introduction. So Pawan is asking about my classes. So Pawan, generally classes are in English. If you have a specific request, then you can contact me through the contact us page. Not generally, almost always. So now let me quickly load up the screen. So EURUSD is visible. Kindly give me one final confirmation. Anybody in the audience that audio and screen both are clear, and in that, after that we will begin. So at my end it is looking fine, but I'll wait for a confirmation there from you guys. Raj, Shekhar or Pavan, Clever, Steve is also here. Anna, EURCAD, EURUSD. Thank you, Anna, for the confirmation. So let me just quickly write down all the instruments so that we can note the timings, followed by SPX. Okay, so let's start off. There is no contact number here. If you want, you can just visit my website and use the contact us page here. Where is it? There it is, contact us. And by the way, if you are interested in personal classes, they are not available unless you have completed my video course. And yeah, guys, I forgot. I have to make the announcement before we start off that from this month's end, that is the last week of this month, January 2023, we will be starting our new batch. And this batch will be, I think, after 6 or 7 months. So after a long time, I'm taking on a new batch. If you have completed my video course and would like to take the classes, you can send the inquiries using the training program LTVatch. If you have not completed my video course or not enrolled in it, then there is no point in sending the inquiries. No details will be provided. Right. So that was for the quick announcement I had to make. Right. So now getting back to our discussion, or starting our discussion to be more precise. So first of all, as you can see over here on screen, the chart of Euro USD. Last time when we discussed, we were very clear that this market is proceeding in a impulsive progression, and the last leg was wave 5th moving ahead, right? And we predicted that the minimum target was this, which we predicted, I think, 2 webinars back, and then the next target was this, right? It seemingly has started a correction here, right? It could still be progressing for the wave 5th up, right? And it could have also completed the progression here. The thing is that I'm not currently interested in suggesting any new positions here. This market was always a kind of a position where if you are long, you keep trailing it, you don't add it, because after all, we are expecting it to be a wave fifth and not a wave three where you just keep adding in the expectations of much higher movement. So currently what I would suggest is that if you were able to catch it when we first discussed the possible long opportunity over here, by the way, this was discussed when this market was actually somewhere here, 6th, 7th January, whenever we were doing the last webinar, or maybe here. I mean, we discussed it at length and we were able to pinpoint that if this is going to be a long, then the swing opportunity has already started. The case we discussed was that back then was that partial positions can be entered here, and if the market progresses further down, then partial positions again can be entered here. So that would have made the whole position before the reversal. So we were expecting either straight up or down and then up. So in this particular case, it went straight up. So partial entries were taken as per our analysis. So right now, as I just mentioned, I'm not suggesting anything in this counter, right? No new longs or anything. If you were long, if you were able to capture it, then yes, keep holding it with your trails. If not, then not much point in this analysis or this counter. Better opportunities are available elsewhere, as we will discuss further in the webinar. Right? Let me see if there was anything else to add here. I think that about covers Euro USD. And nothing really to add here. If long, keep holding. If not, then leave it. So if you guys have any doubts or particular questions, kindly clarify that in the comment section, or if not, then just type in understood or clear something, right? So that way we will then know that everybody is on the same page. Yeah, one thing I like to mention here is you need to check these webinars live when they are broadcasted first on YouTube or wherever you are viewing, because sometimes what happens is we discuss an opportunity and it's missed out by you guys because you are thinking of checking it out as a recording. The whole purpose of doing these webinars is that they are supposed to be done live or checked out live, because they are called trading opportunities, right? And opportunities are appearing live in the market when we are discussing them. Okay, thank you for the confirmation there, Steve and Pawan. Let's move ahead and check out the chart of EURCAD. So first of all, let's quickly go over and see what we were discussing last time. So last time when we checked out the chart of EURCAD, our discussion was that either the correction started from this point of reference around 1.458 is complete over here, right? And if it's complete, then we can see straight up movement. And the second thing we discussed was that it is possible that it is still continuing. If it was still continuing, we would be interested in it once it takes out this alert line, which is placed at 1.4288, right? And we are not interested in long until it takes out the last high, which is currently at 1.45346, right? So personally, this alert does not mean it's a straight out long trade setup, because the correction could still be continuing as a flat. In that case, the market can take out the last high, right? Maybe even go a little bit higher than it and then reverse. So if that was the case, then it will trigger false longs. So I would like to mention here that any longs initiated here should not be gone in with full size position. That is, if you generally take let's say 5 lots, then here it should be 2 lots, right? Not 5 lots, because of the reversal opportunity which is possible here. And also this should be taken as a swing trade in my understanding, because in case there is a reversal, we can enter our partial longs here, or let's say first long position here and then second long position on the reversal. So that is the way we will play EURCAD. Partial entries for longs once the our alert line is taken, right? That is, by the way, my plan. And we wait for possible either complete bullish movement or some reversal for re-entering or adding more, not re-entering, adding more, right? Very simple plan here. And I've discussed both scenarios. Just keep in mind that the worst case scenario, if it goes up and then comes back again, we are not expecting it to go lower than the last low, which is around 1.42366. So that shall act as our stop loss or invalidation level in this particular case. That's why quick take on EURCAD. Let me know, guys, if you have understood it. Next, we will be looking at USDJPY, where we have already sort of very near, so almost achieved our targets, and then EURJPY. Both are moving as per our expectation. Thank you, Steve. What about the other guys? I'm seeing there are many people who are online. What about you, Rajesh and Anna and Clever? I'm not seeing any confirmation from you guys. Are you still with us or what? So let me quickly load the chart of USDJPY. Okay. Thank you, Jill, for the confirmation here. And Rajesh. So first of all, if you guys were in the last webinar, were you able to capture this fall? Because we discussed this trade setup in very much detail last time. And I'll just like to point out that this was our trigger for the downside movement. Now, why I'm asking you to type in the comment section if you were able to catch it or not is so that other people can view, right? So if you were in the last webinar, and even if you were able to not catch it, but you were live and you were able to confirm that we caught it, that I analyzed it like that. I mean, we can always check the video, but not all the people who appear in these webinars are having that much time. Do let me know in the comment section. And I was not able to catch it. But were you able to see it when we discussed it live? That we discussed two strategies basically, and my bias was that if it goes below this trigger line, then we will be looking for the next target. This was the first target, by the way, and the next target will be over here at 126.9. The first target was at 129.072, and entry below 130.8. Okay. So now what is happening here is that the analysis we discussed last time is seemingly playing out as it is. So it's not like I have to update anything here. Only thing is that if you were able to catch it, you would have already booked the partial profits at our target 1, and you hold and trail for the target 2, right? Personally think there is not much to add here. I can go in detail about the structure. I can draw some trend lines. So why not? Let's just quickly do that. 1 second, let me check one more thing. Yeah, so we are in for a Z, so we expect this to be as an impulse, right? So this is the rough outlook I am having here. Now, because there also seems to be a big wave 2, I do not think that the wave is right now complete. I think it will take some time going sideways, right? And wave 3 also has no confirmation yet, so it is possible that it will go something like this. That is some more downside remaining before any possible pullback. Now at this point, as I just mentioned, there isn't much of a point with the analysis or anything else. We already have achieved our first target. It's just basically you need the analysis to find out the best place where you can trail your stop loss to. So roughly speaking, once this wave 3 is over, we would like to check the 38.2 retracement, and then we can move our stop losses there, right? That's basically all the information which is currently needed in my understanding on this counter. And with that, I would say that USDJPY is also complete. Right? Thank you, Clever, for the confirmation that you were able to see, or you were there when we first discussed this trade setup live. If there is any doubt on this setup, you can just type it in the comment section. If not, then kindly do type in understood so that we can move ahead with the next chart. Hello, Arfad. If you are new, there is no issues here. Just stick here. I do discuss even the basic concepts. So just keep listening carefully and you will be able to catch it. If there is some doubt, you can just type that in the comment section later. And just for your information, I'm using advanced Elliott wave concepts here. So if you know the basics, that's good. If not, no issues. As I said, I will go from the, I cover them from the base. Thank you, Jill, for the confirmation, and Pawan and Steve. Now let's go ahead and load up the next chart, which will be EURJPY. Okay, so this is again very interesting. And the reason I'm saying this is because when we discussed it last time, after our discussion, a few hours, or not even few hours, yeah, I think after a few hours, I got the alert that this trend line has been taken out. So if you were in the live webinar, you must be able to recall that we had two discussions here. The first one was that if this market goes ahead and takes out this high, then we can expect this market to go and touch the possibly either 144 level or somewhere within this white box. Generally speaking, it should be able to touch 144. That was basically our main discussion. But I also mentioned the second point, that if this market at any point in time crosses below this trend line or parallel channel, let's say this orange parallel channel, then we shall not be interested in taking or keeping any long positions, and it will then become a possible sell setup, right? And the targets we have already discussed in the last webinars. Minimum target is below the wave 1 low, and the actual target is coming at level T 1.35 135.944, right? I'll probably have to revise these targets because this is a wave 3, so it should go much lower. But we are talking minimums here, and minimum targets, as we discussed last time, are already here. I took this trade. Thank you. This is a message from Steve on our YouTube chat. That's very nice to know, Steve, that you were able to catch it. And thank you for letting others know, letting other viewers know that you were able to take this opportunity. So guys, again, I'll just like to reiterate here, as I always do. You guys need to attend these webinars when they are conducted live. That is the only way you will stay on top of things and will be able to catch these opportunities in live markets, right? And if you guys are new here, I'd like to mention that we conduct these webinars live on my YouTube channel, 50 Eyes Market Analysis, and I conduct them live on Mondays, Wednesdays, and Fridays. Timing is 2 p.m. GMT. So you use your converter or Google to figure out what time it will be at your end, right? So we always go live at 2 p.m. GMT, Mondays, Wednesdays, and Fridays on my YouTube channel, 50 Eyes Market Analysis. Okay, so now with that history being there, I have a few things to discuss here. First of all is that it is playing out in our direction. It is heading down, which is what we expected, right? So that's good. However, I don't kind of like the way it has headed without even touching our expected reversal level, which was around 144. So this gives rise to a confusion here. Number one, if this really is going down or heading down for the wave 3 or C, let me just quickly. So if it is heading down for the wave 3 or C, and by the way, those of you who are not familiar with Elliott wave, just a quick point out that this is the progression we are talking about here. In Elliott wave terminology, this is called progression to the downside in an impulsive formation. First leg down is called a wave 1, second leg up is called a 2, next leg down is 3, up is 4, and down is 5. Now it could also be a correction. So in the correction, just forget the 4 and 5 part, and the nomenclature then changes to A, B, and C. I'm probably covering more information than required, but just keep in mind we are looking for something of this sort, as is on the right hand side, and we expect that the first leg in this progression is complete here, and this is under discussion if the B is complete or not. So as I was saying earlier, the problem that I am seeing here, or the little bit of thing which we need to consider, is that we are seeing a sharp fall without any movement till the expected reversal level around 144. So of course the market can do that, and if it does do that, then that means that the market is strongly bearish. Strongly bearish would suggest that the next leg down should continue much further. Maybe we will be able to see even 1.618 level of this length of the wave A's length, basically, right? However, the second possibility which we need to consider is, see, if the first possibility plays out that the market just heads down faster, then there is nothing we need to do specifically new, right? We are already in shorts, we are already trailing our positions. So if it falls down faster, it falls down faster, right? We have already discussed the downside target of 135.97, and faster means it probably will even exceed that. But partials we will book at 135.97. Now the second possibility which we need to consider is that if this wave B is not complete here and it is continuing, then there is this new possibility which is existing, which suggests that this market can still head higher, and the progression in which it can head higher is currently, I think it has crossed 78.6, so it could become a case of flat, right? So this is second scenario. Second means less possible or less likely, but in the second scenario the market can head higher and touch this level before any bigger reversal, right? So I think currently it is not a very high probability scenario, but I'm discussing it just to keep in mind, right? The main scenario which is playing out is basically, let me change the color here. Yeah, so this is our hyper one. It's suggesting straight down, and hyper 2 in orange is suggesting a up leg and then a down leg, right? Now keep in mind this hypothesis 2 is very less likely because of the strong downward trend, right? But since we cannot completely relegate it until this market crosses below the 137.55 to basically this last low, hence I just wanted to point it out so that you can keep in mind and remain alert of the ways in this market can proceed. I think that's quite detailed for this public discussion, and I probably have discussed a few more points than I initially wanted to. But anyways, guys, let me know if you were able to catch whatever we were discussing here, and if you were, do type in understood or just type your doubt here. I'll wait for a few seconds before we head over to crude oil chart, followed by gold, followed by S&P's 500, followed by Nifty 50 and Bitcoin. Thank you, Jill, for the confirmation. What about the other participants? Okay, thank you, Anna. Thank you, Raj Shekhar and Steve. Okay. Right now on screen, you should be able to see the chart of crude oil, right? And it is sort of doing its own thing here. And that means we need to update this count. So that we will discuss. But before that, let's quickly discuss what we thought of this market last time or in the last webinar. So in the last webinar, from this point of reference, around the level of 76.561, keep in mind I'm using O and A data feed. If you are using CL1 futures, then the current market price is 79.08, and here the current market price is 79.113, or it's fluctuating. You get the point. So I'm showing it because just to remind you guys that there is a difference if you are using a different data feed. If you like to stay standardized, you can always go with CL1 futures, but I have my analysis here, so I don't want to shift it right now. So getting back to our discussion here on WTI's crude oil. Last time we were thinking that if this market is going to go down, that was our primary bias, then we will be interested in it below this alert of 72.493, right? And as you can see, the alert line is still here. That means it was not triggered. That means it is not really doing what we first expected it to do. But because I have not deleted the alert, because I still think that the bias is still bearish, right? So one thing is clear here to me, that I am more interested in looking for short trading opportunities here until I am proven wrong, right? Now let's see what as per the Elliott wave counts and structure wise, what are we seeing here, right? So first that I note that we have a wave Y complete here. Just to remind you guys, if you want to know the detailed longer picture analysis, then check the second or third trading opportunities webinar. You can find it on my YouTube channel. I have discussed it in much detail. I don't want to go here in much detail again, right? And probably I have a specific video on my YouTube channel as well. Just check the video section as well. So what I think here is that happening is, first of all, we were expecting this Z down, right? Now from this point of reference, 76.60 something. As I mentioned, wave Y complete, right? So the possibility is that this is an X. So we can just say that this is heading for A, B, and if this is a C still continuing like a 1, 2, 3, 4, 5, then it can head a little bit higher, right? It can go a little bit more than what we would generally expect in a corrective structure, right? More by more, I mean that it can even go within this price range, 86 to 88, roughly speaking. And the second possibility that I think might be happening over here is we may be seeing a possible triangle pattern here, right? Now the problem is that it looks a little bit unclear which of these two counts is still under play, right? But I still discuss them to just show you that the possibility of a little bit further upside movement, 86 to 88, is still on the cards. That is, this market can still go higher, right? I personally will be interested in short-term long trading opportunities on this counter, but that would only be the case if this market takes out this last high, right? If it does that, then I will consider taking some possible intraday longs kind of situation, not necessarily interested in swing. Maybe it will become a swing opportunity, but currently looking at it only short-term intradays, right? Second possibility or second setup is, as I said, on the downside, nothing really changes. If it crosses the 72.59, then I will be interested in downside, which is the main direction which I believe this counter has. So that's my complete analysis on crude oil. We have discussed the updated view and the possibility of upside with the new targets for the upside in case this market moves there, and the downside possibilities we already know, and I have just rediscussed them. Let me know, guys. Clever, Pavan, Steve, Rajshekhar, Anand, Jill, and others there on TradingView. I think some people are online on that platform as well. If you have been able to understand whatever we were discussing on this counter. Next discussion will be on gold. I'll wait a few seconds to see your feedback before we move ahead. Thank you, Clever. Thank you, Jill, for the confirmation here. Let's just head over to the next chart. Nonsense. So yeah, let's just head over to gold, which actually is working out pretty well. So in this chart of gold, as you can see here on screen, thank you for the confirmation. Rajesh saying I don't trade for commodities. I confirm. Following you. Okay, Rajshekhar, don't worry. We'll be covering Nifty in a while. And I had another project which I had in mind on specifically covering Nifty, Bank Nifty. But I did not see much of enthusiasm from the audience. I was thinking if there was someone who with the access to a wider group or like a Telegram or WhatsApp with the hundreds or thousands of people in it and can share it continuously. Nobody really came forward, so I just ditched the idea for now. Otherwise, we may have even considered that and gone ahead with specific coverage for those markets. So anyways, coming back to our discussion on gold here, as you can see on the screen, we were very interestingly able to catch it multiple times, like all the important legs here. So I would just like to go ahead and show you guys the image from the last webinar. Let me see if I see that. No, I don't have any channel right now. I don't like to form groups. I mean, I have it, but it is private for the students. What I meant by having channels is that if somebody had a group, was an admin of a channel where they can share my work. That's what I actually meant by that. Yeah, so I wanted to show you guys the screenshot from our last webinar. So this is the screenshot from the last webinar's thumbnail, and this was the image which was actually used. So I'm just showing it to you guys because interestingly, when I posted this thumbnail at 1884, and I was suggesting that the market should head lower for wave 4. And when we did the webinar, the market was already lower. And our further analysis was that now it should head higher, and obviously it should go higher. We had the upper targets, which we'll see now. So the reason for showing it is we were able to catch this fall and then this leg up. So 2 trades within the last 2 days itself. Not even 2 days, last 24 hours literally. We were able to catch. Now, not to mention, we were able to catch multiple other long opportunities on gold. If you were following me, then you should be able to recall that we were able to catch this leg and this leg literally as is, right? And if we go past, there are again other opportunities. So there's a lot of things that we were able to catch. The whole point of me just mentioning it is that because people, when they join in, they probably may not be following me for a long time. So I just wanted to point it out that there's a lot of long opportunities we have caught along the way. And as such, till last week, we had caught 15 opportunities within this week, including EURJPY, USDJPY, 2 opportunities there, and this gold opportunity, 2 opportunities on gold, right? So we have caught 15 plus 4 and maybe some other opportunities. Yeah, I forgot about Euro USD. There also we have caught a clear trade. So anyways, my point being that we have caught more than 21 opportunities within the last 5 weeks in total now. 21 opportunities in 5 weeks. This is 25th webinar, right? And these 21 opportunities are the big trades I'm talking about, not the small minor movements, right? These are things which we can say that this was a nice movement which we caught beforehand. So think about it. Basically, it's a little lower than 1 opportunity per webinar, but if you think about it, in some webinars we have caught 2-3 trades right away. Sometimes things like this has happened that I discussed a trade, and by the time the webinar is over, that trade has already completed itself. So my point on reiterating these things has always been to bring more interest in these webinars. Currently, I believe the audience we have is very small compared to what it should be. And as I pointed out many times, things like these are generally always under a paid service, and people charge a lot of money for things like that. And I can tell you with the extreme surety that people charge a lot of things without having any credibility. Here I have with a 6-year track record of 6+ year track record of 80% plus accuracy. So my request here, as I would like to have more participation here, so that's only possible if you guys, my current audience, shares my content within the relevant groups, relevant channels. If you have Telegram, Slack, WhatsApp groups of traders, or have access to somebody who can share my content, or if you have social media, Twitter, Facebook, whatever, and you can share my content with the relevant hashtags like hashtag trading, hashtag gold, whatever, something like that. You get my point, so that I can increase my reach. Then that will be definitely helpful. And that is actually necessary. Like I have conducted 25 of these. I'll conduct a few more, and things should work out as I'm expecting them. If not, then that basically means I'll have to reduce my efforts here because these things cost a lot of time. And why should I discuss my hours of analysis and give you guys trading opportunities if not I'm not even getting the right amount of traction, right? So things always go both ways in life. If you are liking the content and you are not sharing it, then it's not helping anybody, right? And if you are sharing it, then thank you from me, right? That was my request here. Now, sorry for the diversion. Let's get ahead with the gold. So as you guys already know, we have discussed last time that the next target is 1926, roughly speaking. And again, keep in mind, we are using FX data feed. So on a different data feed provider, you might see a small variation in pricing, right? Nothing should be too big, but just keep that in mind. Now, progression we have in mind is I personally do not want to be waiting for a target here. Generally, the idea is if the markets are going in your direction, you should start trailing your profits, right? In this particular case, this market has done a lot of choppy activities. It could mean two things. It could mean that it is forming a sort of diagonal pattern, which will be a completion pattern, which would basically suggest that after a small leg up, it can actually reverse for a bigger fall. Second thing it could suggest is that this market is going on for a nested 1-2-1-2 formation. That is completely inverse of the last analysis. That would suggest that this market can head much higher and take out our 1925 target to the upside and exceed it much higher, right? We had last time discussed even the higher targets. I'll just quickly check them for the purpose that we have something on screen in case the 1925 level is breached. Okay, so 161.8 is around 1935. 1935 is very immediate. That means our longer term targets should come from the higher time frame. So we should head over quickly to 1 hour. Okay, so there goes our follow up targets. And again, as I said, not much relevant for the current price action, but I still would like to have them and leave them over there. I don't think we should care for anything else. And not very surprisingly, it is next target is coming at exactly around 2000, which is again a psychological level as well. So now heading over back to our short-term analysis. Yeah, so actually there is not much to add here. So the way this thing should proceed is if it really is heading higher, then this basically is kind of the springboard where it should give and shoot up, because we are currently, you see over here, we are currently within the wave 3, double bracket wave 3 of Roman wave 3. So you get the point, we are in the 3 of the 3. So if these targets are to be achieved, I think it should just shoot up from here. If things happen differently, then as I said, based on your entry, you will be trailing it. I will not suggest anything here because I don't know what your entry is or if you were even able to capture this long trade setup. And yeah, by the way, guys, if you were able to capture it or if you were able to see it live when we discussed it in the last webinar, because it was like very clear opportunity, definitely let us know in the comment section so that other people who will watch this webinar recording on YouTube are able to see that you were able to capture it. You were able to see the opportunity or capture the opportunity. So yeah, heading back to the analysis, not really much to add here. If you are long, it should shoot up nicely here, nicely from here. And if not, just trail it. Why am I even repeating myself? So we will be heading over to the next chart of S&P's 500. Let me know, guys, if you were able to understand the whole thing. If yes, then kindly type in understood or just type your question here. After S&P, we will check out Nifty followed by Bitcoin. So Thank you, Clever. Yes, I did. Oh, please do type in yes, I did catch the gold trade opportunity, because people who watch the recording, they do not have the context of where what is said. So these statements may not make any sense to them. And the whole reason of asking you guys to write this is to bring credibility that there are real people who are catching these opportunities in live market. I mean, my credibility is already there with 6 years plus record. The credibility of these comments is that people are seeing the results in their own trading, right? And Scalp did too. So Clever was able to catch the long opportunities and take some scalps as well on this gold long trade which we discussed. Thank you, Jill, Anna, and Pawan for the confirmations. And let's head over to our next chart, which is the chart of S&P's 500. I do not have an Instagram, Pawan, right? I'm a trader, not an influencer. Just kidding. I believe that's what people mostly use that platform for. So now let's discuss what happened with S&P's 500 and what we can expect on this counter. Last time when we discussed S&P 500, the analysis was that this market can continue further up till the level of 4,000, as is pointed out by this white box, right? The general idea was that within this white box, this market can even give a possible reversal. And if it still continues higher, then we expect it to touch the upside level, basically touch the 4,000 level. So it has sort of does that already. It kind of touched 4001. So I mean, it basically did exactly that. So the second thing, which was that around that level we may see a reversal. Now there is no clear sign of reversal as of yet, right? So let's discuss the count right now. I personally think that this is continuing as a possible diagonal structure from this point of reference. This is the wave 1 up, wave 2 down, 3 and 4 down, and the 5th. Keep in mind, if you are not familiar with what a diagonal is, we are just talking about a wedge pattern. When it comes to Elliott wave, there are certain rules and guidelines. And one of them is that the wave 4's price action should go inside the wave 1's price action. So if you see, this is the boundary line for wave 1, and it has wave 4 has already gone and touched the price action of wave 1, gone inside it. So that's why I'm calling this pattern as a possible diagonal structure. Now, as you can see with the numbering over here, or the labeling, that we expect a possible wave 5th up, right? What is the future after the wave 5th? We generally expect that this market will go down, take the trend line to the downside, and then possibly retest it, and then further down movement is possible. But I personally would not go that far ahead, right? Because even this current opportunity is a pretty big movement for this counter, right? 30 points or so, roughly speaking, right? So first of all, I personally would suggest one more thing here, that there is a distinct possibility which is low probability, but which suggests that the whole movement may have completed here. Now, how it may have completed here, that is something I will not discuss, but just keep in mind that I'm saying it based on few facts. First is that the 4,000 level has already been touched, and if you guys recall, that was the level where I said that a reversal can form, right? And second thing is we also saw a news incoming around the same level, and then these spikes. So generally, when price action becomes rough and spiky like this, sometimes the market completes a pattern without giving a clear indication on a high time frame. So something like uh, diagonal complete, but on 15-minute it will not be visible, right? So this thing comes from my years of experience in trading these instruments. So that's why I'm saying longs are a little bit risky here, right? The only time I will be personally interested in long is as an intraday on this counter. And by intraday, I mean that if this market takes out this high, then I'll trade it for this small amount of opportunity. But as I said, not said, as you know, these kind of trades, not everybody can pull, and they require you to be remain directly on screen, right? Maybe you can put an what do you call market limit order, right? And expect to trade it like this. But as I said, these are not to be traded like that, because when something like this you are trading with this small amount of movement, then you can even see a spike in a second and then the reversal in the next second, right? So that is the kind of trade I will be interested in on S&P, right? And I've already explained the reasons why I do not want to take this with a bigger position or a swing trade. But with all that being said and done, the swing trade is still valid and it might just go ahead. But as I said, I'm not very interested in that. Further discussions, there are many possibilities forming. There is also the possibility that this market has completely completely done for with the fall for now for the few sessions, and it might just continue upside. But that all we don't want to discuss. We are much more interested in how this market reacts from this point of reference, right? So now I have discussed the upside trade setup here on S&P. As for the downside, I'm currently not going to be interested in it unless, of course, this market heads lower than 3930 levels. Keep in mind our data feed right now is FX. If you are using a different data feed, it will be different, right? So the reason for taking it lower than 3930 is that below that the diagonal count will get invalidated, most likely or heavily likely that it will be invalidated by then. And that would suggest that the reversal either as a correction or as a complete impulse down has already begun, right? So these are the two setups. Below 3930 we will be interested in possible shorts, and above the recent high around 3996 short term intraday longs are possible. Very clear and very detailed analysis here on S&P. Let me know guys if you have any doubt. If not, you can just type in clear or understood in the comment section. Okay, I'll wait for a few seconds here before we move over to our last two charts of Nifty and Bitcoin. And also, because we have discussed the majority of charts, I would like to take the time here and request you guys that you definitely hit the like button on YouTube. If you are on a different platform, hit the like buttons there, right? And make sure that after the webinar is complete, you share it with at least 3 people in your circle or 3 groups. If you have any group of traders which you have joined, like WhatsApp or Telegram or whatever you guys are using, please share it there. If you are not using something like this, but you are on Instagram, I don't know Instagram has a sharing feature or not. I mean, if you are on Facebook or Twitter, they have a sharing feature where you can share my link with the relevant hashtags. And keep in mind, this sharing is sort of necessary at this point for me to grow this audience over here on my YouTube. And with more audience comes more of these webinars and more content for you guys, right? Lower participation would mean the opposite thing, right? So that's my request here. Let me quickly check the comments here. So Jill saying great, thanks. Okay, you're welcome, Jill. And I saying perfect. And Steve is clear. And so is clever. Okay, guys, let's move ahead. And I think they have missed something. Nitin is saying your view on Nifty and gold was good. I am viewing your recording from last week. This first time I'm going live. Plant rate. Okay, keep in mind, guys, that the disclaimer is there for real. I don't take any responsibility for the trades you actually conduct, right? All your trades are your own responsibility. And why do I keep the disclaimers and keep pointing these things out is because I've been doing it for many years, right? Sometimes people take these things personally. They put all their money like playing a lottery or something. And if you do things like that, there's a heavy chance it might not work. And then they always like to take it out on somebody. That's why the disclaimers are there, and that's why I keep pointing them that trade wisely and don't gamble. Okay, guys, so let's head over to Nifty 50, which also again has done what we were discussing on it the last time. Okay, so here on screen you have the chart of Nifty 50. And last time when we did the webinar, my view was very clear and straightforward that I expect more bearishness on this counter. We discussed it on 11th January 2023. So let me just quickly check 11th January 2023. Yeah, so this is where we discussed it before this leg down. and my view was very specifically clear that my bias was bearish and that this market could head lower, right? So now if you guys were not in the last webinar, then you can check it in the recording, check it at the Nifty 50 part because it will be available with timestamps. But I'm pointing it out to you and reiterating it here just to show you guys that we have been catching opportunity after opportunity. And as I just calculated near our discussion on gold, I think that we have got 21 opportunities within these 24 webinars, right? 25th is this one. So I will not type in 25 here. Then 21 opportunities we have caught in 24 webinars. These are all the major movements I'm talking about, not the minor small movements, all major movements, these 21 trades, right? So let's just quickly discuss the progression here and what I think of this counter right now. So the count we have been following was so far that this is possibly triple zigzag formation. Now the thing to note here is that as soon as this market took out the wave Y low, which it did very small movement below 1776, 17776, 17776, right? So it has gone below it. It has gone to like 5-6 points below it, roughly speaking. It doesn't really matter how much. But why am I pointing this out is that by going below it, it has theoretically and practically completed the minimum requirement for this pattern to complete. Now that's another issue, that we expected waves to go much lower, right? And believe me, I got caught in that idea as well, that it should head much lower. But the market does what the market does, right? And it has sort of gone higher. So we'll discuss further cases here. But before we move to further cases, just keep in mind that if this market decides to form bullish scenarios from here, it is definitely possible and 100% likely, right? Because the bare minimum is complete, right? Do I like to see a small move like this? No, I personally think that wave side might still be continuing. So that brings us to our current discussion. I think that it is possible that wave, because see, if you are not much familiar, then I'll just quickly point out that what we have here is a triple zigzag formation, right? So triple zigzag, the first leg down is called a W, the next leg down is called a Y, and the next one is called a Z. All the connecting waves are called X and X, okay? So because we have the first connecting wave already complete and we are expecting the next connecting wave here somewhere, it is possible that the connecting wave itself becomes a bit of a complex pattern, because if it can become a bit of a complex pattern, there are multiple possibilities that might arise. One of those possibilities could simply be that this is a lower degree wave A, let's say dot A. This probably may be even dot B, and this is heading down for a up for a 1, 2, 3, 4, 5 for a dot C. Once the dot C is complete, then we may see a reversal here, right? That's one of the many possibilities that might be happening here. And again, the reason being that maybe the wave Z is remaining, right? So that's just one case. Keep in mind, guys, I'm just reiterating it again and again, because if it's a complex, then it can do so many things. There isn't much point in discussing. Just keep in mind, it could remain sideways within this box range for a long time and give a down leg as well, right? Now, let's discuss the other scenario, that if the wave Z is complete, then what do we do? So if the wave Z is complete, actual confirmation cannot be done here. Actual confirmation actually requires the market to move at least higher than this last known resistance around 18,250 something, roughly speaking, right? Until the market really just goes above it and then sustain above it, we cannot really say that the correction to the downside has completely completed or is done and over with, right? So not much I can add for the bullish scenarios here. Only thing is that it is definitely a possibility. I will not go any further in discussion on Nifty here. I think we have discussed quite enough. There are some other possibilities and alternate count, but that goes beyond the scope of these public webinars. And we are already nearing our 1 hour mark. So just let me know, guys, if you are able to catch it. Last chart we'll discuss is Bitcoin before we end this webinar. I am seeing some comments here. Is it possible that the pattern is in the wedge from the reference point forming AE pattern? What is AE pattern? You are talking about a triangle. A triangle is the only pattern with A and E in it. It is possible. As I said, wavex can form many things, and as I said, there is not much point in discussing it, right? Because it can do many things. So I personally do analyze these. This is just one chart I'm sharing. I have 4 or 5 charts open for Nifty on a different tab. I use a multi-monitor display. But as I said very clearly, that this is as far as I can go in these public discussions. If I wanted to discuss it in much detail, probably it will take more than an hour to just discuss Nifty. But then again, we don't come here for this, right? Do we? These webinars are called trading opportunities. Okay, so Clever is saying clear. Steve is saying thank you for the tuition on WXY. Okay, you're welcome, Steve. Rajesh is saying got it. Okay, guys. So in that case, let's head over to our last chart. And before I do that, again, for those of you who might be watching this part as a recording or who have joined in later in the webinar, do hit the like button on YouTube or whichever platform you are viewing this on, and make sure that once the webinar is complete, you are going to share it with at least 3 people in your circle or 3 groups if you are in some trading groups. That is definitely required at this point in time for me to grow the audience and to ensure that these webinars keep coming every week, 3 times a week. Let's head over and load up the last chart. Bitcoin. So last time when we discussed, we made an update here. We did a short time update on Bitcoin, and we said that this market is possibly forming a sideways pattern, right? And I even gave the price targets for it for the wave C heading higher. Now keep in mind, this is one of the many possibilities we've discussed, and let me just give the whole idea so that people can understand what we are doing here. Okay, so what we are seeing here is from this point of reference, I'm assuming that there is a continued sideways corrective movement going on in this market. Continuous sideways correction basically means it could be a complex zigzag, flat, triangle, not zigzag. It could be a complex flat or triangle pattern, right? So what that basically means is that we expect that this market would most likely remain within this box range. Yeah, it did go below it once, so the box range should then be expanded to contain that as well, right? Now, within this sideways movement, I predicted that there is a heavy possibility or some likelihood, not heavy, that we may be forming a possible triangle pattern. And a triangle pattern basically means that the market would, from this point of reference, it would move something like this, in such a manner that if we draw trend lines on it, they converge at a point in the future, right? Now we keep this pattern in mind and we look at the actual price data. This is one of the many possibilities that can happen here, right? Further on, I added the targets here with this white box, which is around here. And then this blue line is the maximum. We do not want to see it go higher than that because that will raise some new possibilities. So now what I basically mean is, in simpler terms, is that we expect that this market can go ahead and stop within the price action of price level of 20,400 to 21,600, right? Maximum, I do not want to see it go higher than 23,180. It can go higher than that a little bit, like a few points. Do not take these levels as proper price targets because price targets are always a range. But what I mean by not higher than that is that if the market closes above it and sustains above it, then that might give rise to some new possibilities. And we have to, at that point in time, relegate the possibility of this triangle, which I just discussed, right? And as I said, many things are possible here. I'm not discussing many things because we do not come here to discuss many things. I just come here to show you the most recent, most simplest trading opportunity. Keep in mind that because it's not a class on Elliott Wave, and I know that not everybody can grasp everything perfectly, I have to stick with the mere basics and keep the discussions limited to them, right? And while we are discussing this long, do keep in mind that this market is still open for further downside. That is, our primary analysis is suggesting that all this sideways movement and small upside movements are just a continuation of the fall that might happen later on. We have already discussed the targets for the fall. They are around 15,300, I think, and the next one is 14,780, 790 something. We possibly will have to update those targets, but I'm reiterating it because you guys keep in mind that sideways movement we are expecting is going to be followed by a fall. Only time I will not be considering that as a scenario anymore is once this market has absolutely established itself above 23,200, roughly speaking. Right. So that's my quick take on Bitcoin. Short term wise, up, right, and further on, like overall or swing picture, downside still cannot be relegated. So that's it for today's webinar, guys. Thank you for joining in our 25th webinar. It feels good to know that we have conducted 25 of these, right? And as I have said so many times, do make sure you share the webinar once it's complete, hit the like button. And finally, again, I like to take a few seconds and just let you know, guys, that if you have completed my video course and are interested in learning with me, then keep in mind the exclusive training program LT, which is being conducted after many months of waiting, will be starting at the end of January 2023. If you have completed my video course, you can send the inquiries using the training program LT link. So that would be all from me, guys. I hope you enjoyed it, and I hope you keep joining these webinars and keep sharing the content. Right? You're very welcome, Jill and Steve and Raj Shekhar. And I hope to see you guys in the next one, guys. Bye.